Well, hi everybody. It's another week, and so what I wanted to do is actually give you the what the portfolio should be for the upcoming 2 weeks, and what you see on the screen is the allocations. And again, there's roughly 20 securities within this allocation optimization that I've done. And as I've mentioned before, the way I prepare these is it's a combination of fundamental analysis as well as some AI modeling to optimize the exact securities to focus on, especially for the upcoming 2 weeks and even up to a month. So it's a combination of the two. And again, I'll get into a lot more details in some of the future sessions as I get into more of the fundamental analysis, what I do, how I do it, as well as on the modeling side around AI, what I'm doing and how I'm doing that to make it work with the fundamental analysis. So again, take a snapshot of it. And again, this is good for the next 2 weeks. And what I wanted to show next is actually the returns that we got actually from the last allocation. And so right there at the top, in gold, the allocations that I had from 2 weeks ago, they returned roughly 0.85%. And the S&P 500 returned 0.25. So obviously a lot better than the S&P 500. And then the last two columns, what I have there is basically the cumulative returns over roughly 12 months. And obviously, if you look at column two and column three, those are the individual returns. Again, for the most part, my portfolio has always done better, than the S&P 500. And so when you look at the cumulative returns from seven from July 3rd, actually, all the way up to June 18 of this year, the total return has been 70.53%. Whereas if you look at the S&P 500, the cumulative returns have been roughly 9%. That's 8.92%. And obviously we've had a downturn in the market a couple of months ago. It's come back up. But even before then, the market has it's risen. It's also been a little tumultuous. And so, but still it's had a 10, almost a basically a 9% return, which is very good. It's not bad. It's actually very good. But again, my portfolio, again, which is more optimized to really look for the best returns, given my universe of securities that I'm looking at, which is very diversified actually, across companies, sectors, um, commodities, and different regions. So it's again very, very well balanced, very diversified. The returns have been again roughly 70.53%, which is pretty good. And so the goal is to continue beating the S&P 500 by hopefully a substantial margin as of what I'm showing you right now based on the cumulative returns for the past